Hello, my dear students. A very warm welcome to all of you in Shri Jaindra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 5, that is Concept and Accounting of Depreciation. All the concepts will be covered in the coming series of lectures. This is lecture number 4. Let us begin. Let us continue. Write an example. Write an example. Example number 1. Example number 1. Just continue and write. Write X Limited purchased X Limited purchased X Limited purchased a second hand machine. X Limited purchased a second hand machine for rupee 5 lakh for rupee 5 lakh and spent and spent rupee 1 lakh and spent rupee 1 lakh on its repairs. So over here, X Limited purchased a second hand machine for 5 lakh and spent rupee 1 lakh on its repairs. Depreciation is to be provided depreciation is to be provided at the rate 10% per annum according to at the rate 10% per annum according to straight line method the machine is sold for rupee 4,50,000. The machine is sold for rupee 4,50,000. Accounting year is financial year. Accounting year is financial year. That means the year will start from 1st of April and the year will end to 31st of March. I believe you understood. That is financial year. Please continue and write calculate the profit or loss on sale of machine in each of the following alternative cases. In each of the following alternative cases. Let us start with case 1. Let us begin with case 1. If date of purchase is 1st of April 2015 and the date of sale is 31st March 2018. If date of purchase is 1st April 2015 and date of sale is 31st March 2018, then how the profit or loss on sale is to be calculated over here in case 1. Just see this solution. Just see over here. We'll try to calculate the total cost of the asset. First. So over here we have purchased the asset for 5 lakh. It is an old asset It is a second hand machine that we have purchased for 5 lakh, and we have incurred 1 lakh rupee on the repairs. So 5 lakh plus 1 lakh equals 6 lakh. 5 lakh plus 1 lakh equals 6 lakh. So total of the cost of the asset is 6 lakh. Less less depreciation, because we need to calculate the WDV. So depreciation from date of purchase, depreciation from date of purchase to date of sale, that is till date, to date of sale. So if you calculate the duration, that is 1st of April 2015 to 31st of March 2018, that is 3 years. 3 years means 36 months. 3 year means 36 months. So we have to calculate depreciation on this value, 6 lakh. The rate of depreciation is 10%, 36 months, so 36 by 12. So depreciation for 3 year will be 6 lakh multiplied by 10 by 100 multiplied by 36 by 12. This would be this would be 1 lakh 80,000. This is 1 lakh 80,000. So 6 lakh minus 1 lakh 80,000 is 6 lakh minus 1 lakh 80,000 is 4 lakh 20,000. 4 lakh 20,000. This is book value. This is book value as on date of sale. As on date of sale, this is the book value. 6 lakh minus 1 lakh 80,000, that is the depreciation from the date of purchase to the date of sale. We have calculated the book value as on date, that is 4 lakh 20,000. Now we have sold the assets for 4 lakh 50,000. So less sale proceeds, less sale proceeds, that is 4 lakh 50,000. Sale proceeds, that is 4 lakh 50,000. So 30,000 over here, this 30,000 will be loss on sale, loss on sale. So the book value of the asset is 4 lakh 20,000. We have sold it for 4 lakh 50,000. That means this is profit. That means this is profit of 30,000. So just write over here profit profit on sale of machinery. Profit on sale of machinery is 30,000. I believe it is clear. Profit on sale of machinery is 30,000. Case A is clear to all of you. Case 1 is clear. Let us shift to case 2. Let us shift to case 2. Case 2. Case 2. If date of purchase is 1st of April 2015 and date of sale and date of sale is 30th 9 2017. If date of purchase is 1/4/2015 and date of sale is 30th 9 2017. I believe you understood this. Let us try to solve it. Let us try to solve it. First of all, we'll calculate total cost of asset. Total cost of asset. So total cost of asset 5 lakh plus 1 lakh incurred on installation and repairs. So 5 lakh plus 1 lakh equals 6 lakh less depreciation from depreciation from date of purchase, depreciation from date of purchase to date of sale, to date of sale. So this would be 1st of April 2015 to 30th of 9 2017. 1st of April 2015 to 30th 9 2017. It is 30 months. 30 months. So for 30 months we need to do the calculation. 6 lakh 6 lakh multiplied by 10%, 30 by 12. 30 by 12. So the depreciation amount is 1,50,000. The depreciation amount is 1,50,000. 6 lakh minus 1,50,000 is 4,50,000. 4,50,000. So this is book value. This is book value as on date of sale. As on date of sale. Book value as on date of sale is 4,50,000. Sale proceeds is 4,50,000. So less sales proceeds, that is 4,50,000. So 450 minus 450, it is nil. It is nil. So profit oblique loss on sale of machinery equals to nil. Case 3. Case 3. Please write case 3. If date if date of purchase is 1/7/2015 and date of sale is 31/3/2018. First of all, we need to calculate the total cost of asset. Total cost of asset, that is machinery, that is 5 lakh plus 1 lakh on repairs. So the total is 6 lakhs. The total is 6 lakhs. Less, we need to deduct the depreciation from it. So depreciation from date of purchase, depreciation from date of purchase to date of sale, to date of sale. We need to calculate it. So date of purchase and date of sale, so that is 1/7/2015 to 31/3/2018. We calculate the months. It is 33 months. It is 33 months. So 6 lakhs, the cost of the machine, multiplied by 10%, multiplied by 33 by 12, multiplied by 33 by 12. So this is 1,65,000. The depreciation is 1,65,000. 6 lakh minus 1 lakh 65,000 is 4 lakh 35,000. This is book value. This is book value as on date of sale. Book value as on date of sale is 4 lakh 35,000. We need to deduct sale proceeds. So less sale proceeds. We sold it for 4 lakh 50,000. We sold it for 4 lakh 50,000. Book value is 4 lakh 35,000. Sold it for 50,000. 450. So 15,000 there is a profit. Profit on sale. Profit on sale of machine. Profit on sale of machine is 15,000. I believe it is clear to all of you. Let us move ahead and write case D. Let us move ahead and write case 4. If date of purchase, if date of purchase, if date of purchase is 1/7/2015, 1/7/2015, and date of sale is and date of sale is 39/2017, 39/2017, then how the calculation of profit or loss on sale will take place? Starting with the total cost of asset. Total cost of asset 5 lakh plus 1 lakh equals 6 lakh. Total cost of asset is 5 lakh plus 1 lakh is 6 lakh. Deduct depreciation. So depreciation from date of purchase, from date of purchase to date of sale, to date of sale, that is 1/7/2015 to 39/2017. If you calculate the months, it is 27 months. It is 27 months. So 6 lakh multiplied by 10% multiplied by 27 by 12. 6 lakh multiplied by 10 by 100 multiplied by 27 by 12. It is 1 lakh 35,000. It is 1 lakh 35,000. 1 lakh 35,000. 6 lakh minus 1 lakh 35,000 is 4 lakh 65,000. 4 lakh 65,000. This is book value. Book value as on date of sale. As on date of sale 4 lakh 65,000 less sale proceeds, less sale proceeds 4 lakh 50,000, 4 lakh 50,000, that is 15,000 in minus. So we made a loss. We made a loss over here. So just write over here loss on sale of machine. Loss on sale of machine. I believe you must have understood this. Write an illustration. Write one illustration. Write one illustration. On 1st April 2015, on 1st April 2015, Xerox Limited, Xerox Limited purchased, Xerox Limited purchased a a second-hand machinery, purchased a second-hand machine for rupee 80,000 and 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 spent rupee 20,000 on its cartage, spent rupee 20,000 on its cartage, repairs, repairs and installation, repairs and installation. The residual value, the residual value at the end of at the end of its expected useful life, expected useful life of 4 years, expected useful life of 4 years is estimated is estimated at rupee 40,000, estimated at rupee 40,000 on on 30th September 2016, on 30th September 2016, repairs and renewals, repairs and renewals amounted to rupee 2000, amounted to rupee 2000. On 30th September 2016, repairs and renewals amounted to 2000. Next, on on 30th September 2017, on 30th September 2017, the machine is sold for 50,000, is sold for 50,000. Depreciation, depreciation is to be provided, depreciation is to be provided according to straight line method, straight line method. Depreciation is to be provided according to straight line method. I believe you must have understood the illustration. Kindly read it once more. On 1st April 2015, Xerox Limited purchased a second-hand machinery for rupee 80,000 and spent rupee 20,000 on its cartage, repairs and installation. The residual value at the end of the expected useful life of 4 years is estimated at 40,000. On 30th September 2016, repairs and renewals amounted to 2000. On 30th September 2017, the machine is sold for 50,000 and depreciation is to be provided according to straight line method. What is required in this question? Just write required, prepare, prepare, prepare prepare journal. Next is prepare machinery account, prepare machinery account, prepare machinery account and depreciation account and depreciation account for depreciation account for the first 3 years, for the first 3 years, assuming that assuming that the accounts are assuming that the accounts are closed on the accounts are closed on 31st March accounts are closed on 31st March each year. Accounts are closed on 31st March each year. I believe you must have understood the question well. Let us begin by journalizing it. Let us begin by journalizing it. Right, solution. 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 The first is journal of, make journal. So, journal of Xerox Limited. Journal of Xerox Limited. I believe you must be knowing the format of journal. Date, particulars, ledger folio, debit amount and credit amount. So, date, particulars, particulars, ledger folio LF, debit amount that is rupee and credit amount that is rupee. Understood? Let us journalize the question. On 1st April 2015, Xerox Limited purchased a second-hand machine for 80,000. Xerox Limited has purchased a machine for 80,000. So write it over here. 1st April 2015, machinery we have purchased. So machinery account debit to bank account to bank account 80,000. I believe it is clear. On the same day, first for 2015, first for and 2015, 20,000 is paid for cartage and installation. But before that, just write narration over here. Being the machinery purchased, being the machinery purchased, being the machinery purchased. I believe it is clear. The next entry would be of the same date, 1/4/2015. Machinery account debit, machinery account debit to bank account, to bank account 20,000. 20,000. This 20,000 relates to carriage, cartage, and installation. So just write being the cartage and installation, being the cartage and installation charges paid. Okay, let us continue. Let us continue. Next entry. So once we have purchased it, we also need to put depreciation. We need to calculate depreciation. Just check what is the date. So over here, we need to calculate the rate of depreciation and the amount of depreciation. So we need to make working note for that. We need to make working note for that. Just leave this much and write working note, working note, working note first. calculation of the rate of depreciation, the rate of depreciation, calculation of the rate of depreciation. First, we will calculate the total cost of the asset. So, calculation of total cost of asset, calculation of total cost of asset, that is 80,000 plus 20,000 equals 1 lakh. 80,000 plus 20,000 equals 1 lakh. Next, calculation of amount of depreciation, per year, amount of depreciation per year. Please write the formula: total cost of asset minus estimated residual value divided by expected useful life of the asset. So over here, total cost of the asset is 1 lakh. Residual value given in the question is 40,000 and expected life is 4 years. So the amount of depreciation is 15,000. So the amount of depreciation is 15,000. We need to calculate the rate of depreciation. Calculation of rate of depreciation. Calculation of rate of depreciation under straight line value method. Equals amount of depreciation divided by total cost of asset divided by total cost of assets multiplied by 100. So 15,000 divided by 1 lakh multiplied by 100. Kindly solve it. 15,000 amount of depreciation divided by total cost of asset 1 lakh multiplied by 100 equals 15%. This equals 15%. I believe it is clear to all of you. Let us go back and pass the entry for journal, entry for depreciation. The date is 1st of April 2015. So the next date would be 31st of March 2016. Depreciation account debit to machinery. The amount would be 15,000. All of you are aware about this. Amount is 15,000. Just write the narration: being depreciation provided. Is it clear to all of you? Okay. This depreciation should be charged to profit and loss account. The amount of depreciation should be charged to income statement, that is profit and loss account. So the next entry would be profit or loss account debit, profit and loss account debit to depreciation. Profit or loss account debit to depreciation account. Just see the journal, just see the narration. Over here, the amount would be 15,000. The amount would be 15,000, and the narration being the transfer of transfer of depreciation account. Being the transfer of depreciation account. Let's go back to the question now. Let's go back to the question. The residual value at the end of the expected year 4 years is 40,000. On 30th September 2016, on 30th September 2016, repairs and renewal amounted to 2,000. Repairs and renewal amounted to 2,000. On 30th September 2017, the machinery is sold for 50,000 as depreciation is charged according to SLM. Okay, so kindly pass the entry for repairs and renewal now. Repairs and renewals. Repairs and renewal 30th 3 2016. Repairs and renewals. Repairs and renewals account debit to cash account 2000 to cash account 2000 being the payment made being the payment made for repairs and renewals being the payment made for repairs and renewals. Let's continue. Let's continue. Let's provide for depreciation again. Depreciation account debit. Depreciation account debit to machinery account 15,000 15,000 15,000 being the depreciation provided being the depreciation provided being the depreciation provided. Understood? Being the depreciation provided 15,000 15,000. Transfer this amount of depreciation to profit and loss account. So the next entry is profit and loss account. Profit and loss account 15,000 to depreciation account 15,000 to depreciation account 15,000. Narration being the transfer of depreciation being the transfer of depreciation being the transfer of depreciation account. Understood? Let us continue. Let us continue. On 30th 9 2017, the machinery is sold, so we have to calculate the depreciation till that date. We need to calculate the depreciation till that date. So the depreciation for whole year is 15,000. So for 6 months it would be 7,500. Charge it to machinery. So depreciation account debit, depreciation account debit to machinery account, to machinery account being being the depreciation, being the depreciation provided, being the depreciation provided 7,500, 7,500. Understood? Being the depreciation provided 7,500, 7,500. Let us continue. So once we have provided for the depreciation, we'll record about the sale. We'll record the sale. So on 30th 9 2017, the sale of machine took place for 50,000. So bank account debit to machinery account 50,000, 50,000. Being the machinery sold, being the machinery sold, being the machinery sold 50,000, 50,000. Is it clear? Is it clear? Now we need to calculate whether we have made profit or loss on sale of machinery. So for that, working note number 2, we need to calculate working note number 2, calculation of either profit or loss on sale of machinery, on sale of machinery. How will calculate that? First we will write total cost of asset, total cost of asset, that is 80,000 plus 20,000 installation, so 1 lakh. So 1 lakh less depreciation, less depreciation from date of purchase, from date of purchase to date of sale, to date of sale. We need to calculate depreciation from date of purchase to date of sale. So 1 lakh multiplied by 15% and calculate the months. It is 30th month, 30, 30 months. 1 lakh multiplied by 15% to 30 by 12, that leads to 37,500. 37,500. So 1 lakh minus 37,500 is 62,500. It is 62,500. What is this? Book value. Book value. Book value of machine as on. Book value of machine as on date of sale. As on date of sale. Now the sales proceed is given in the question, that is 50,000. So less sale proceed, less sale proceeds 50,000. So the value is 62,500, but we sold it for 50,000. That means we incurred a loss of 12,500. This is a loss. Just write over here, loss on sale of asset, loss on sale of machine, that is 12,500. That is 12,500. 500. Understood? Now, pass a journal entry in relation to this loss. Pass a journal entry in relation to this loss. The date would be same, 39 2017. Profit or loss, profit and loss account debit, profit and loss account debit to machinery account, to machinery account. 12,500, 12,500, 12,500. Stretch these lines. 12,500. Write a narration to this, being the transfer of loss, being the transfer of loss on sale of machinery, on sale of machinery. Understood? Understood? Okay. I believe you must have understood till here. Now this depreciation needs to be transferred to profit and loss account, this depreciation that we have charged. So just write the date over here, that is 31st March 2018. Profit and loss account, profit and loss account to to depreciation, to depreciation account. I believe you understood. Let us write the narration, being the transfer of depreciation, being the transfer of depreciation. What is the amount? 7,500. 7,500. I believe you understood till here. I believe you understood what we have done. We have done with the journal entries of Xerox Limited. The first part of the question is done, that is prepare journal. The second part, prepare machinery account and depreciation account for the first 3 years, assuming that the accounts are closed on 31st March each year. The accounts are closed on 31st March each year. So we'll continue and we'll work on the second part of the question, that is prepare machinery account and depreciation account. Let us continue with part 2 and let us try to make manufacturing account. Let us try to make manufacturing account. Machinery account. Machinery account. Let us try to make machinery account. Draw the format of the account. Date particulars amount. Date particulars amount. Date particulars amount debit and date particulars and amount credit. Understood? Let us continue. Let us continue. First April 2015, the machinery was purchased. So to bank, amount is 80,000. Amount is 80,000, and on the same date the installation charges needs to be capitalized. For 20,000, the installation charges needs to be capitalized. For the same year, the depreciation for the whole year needs to be calculated. So by depreciation 1 lakh multiplied by 15% for the whole year, so 12 by 12, so 12 by 12, 15,000. 15,000. I believe you understood this. So over here, just try to close it. 1 lakh, 1 lakh, 1 lakh, 85,000 is the balancing figure. 85,000. We will write by balance carried down. We will write by balance carried down. This 85,000 will become to balance brought down over here. To balance brought down 85,000, and the date would be 1st of April 2016. 1st of April 2016, the date would be to balance brought down. I believe you understood till here. Let us stretch these lines. Now again we need to charge depreciation. 31st of March 2017 by depreciation 1 lakh. It is SLM, so it would be 1 lakh 15% for the whole year. This would be 15,000. This would be 15,000. Let us try to close this year. 85,000 over here. 85,000. 85,000 minus 15,000 is 70,000 by balance carried down. By balance carried down 70,000. This 70,000 will become opening balance the next year, that is 1/4/2017, to balance brought down 70,000. Now this year we have sold this machinery. What is the date? 30th 9/2018. So we need to calculate depreciation for half year by depreciation. So 1 lakh, 1 lakh, we need to calculate depreciation for half year. So 1 lakh multiplied by 15%, that is 15,000 multiplied by 6 by 12, 6 by 12. So the value of depreciation is 7,500. So the value of depreciation is 7,500. I believe it is clear. On the same date we have sold this machinery. On the same date we have sold this machinery. By bank sale of machinery. We have sold the machinery for 50,000 rupees. We have sold the machinery for 50,000 rupees. So we will record this. When we have sold the machinery at 50,000 rupees, the book value of the machinery was 62,500 rupees. We have calculated the book value of machinery, that was 62,500. We sold it for 50,000 and we incurred a loss of 12,500 on this sale. We have incurred a loss of 12,500 on this sale. This loss needs to be recorded in the machinery account. This loss needs to be recorded in the machinery account. So we will record this loss over here by profit and loss account, but this is loss 12,500. This is loss of 12,500. Let us try to close this account. Let us try to close this account. Over here it is 70,000, 70,000. 50,000 plus 12,500 and 7,500. The total is 70,000. The total is 70,000. So this account is closed. Machinery account is closed over here. Let's make depreciation account now. The next account is depreciation account. Depreciation account. Depreciation account. Debit, credit. The format will be the same. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. Date, particulars, amount. March 31st, 2015. This entry, this first one, 2016. This 15,000, this 15,000, and this 7,500. These three entries will come over here. So 31st March 2015 to machinery account, to machinery account, $15,000 to machinery account, 15,000. Over here, this 15,000 would be transferred to profit and loss account. So 31st March 2016, this would be transferred to profit and loss account by P&L account, by P&L account. So first of all, we transferred from machinery account to depreciation account to machinery 15,000 31st March 2016, and on the same date we transferred it to the profit and loss account. The next entry 31st March 2017 to machinery account, to machinery account. The amount is 15,000. The amount is 15,000. The amount is 15,000. This 15,000 will be transferred to profit and loss account. So by P&L, the date is same 33/3/2017. Next, 30. The next 39/2017 to machinery account, to machinery account 7,500, 7,500, and this 7,500 will be transferred to profit and loss account. So by P&L account, the date would be 31/3/2018. This should be transferred to profit and loss account. So we have transferred 7,500 to profit and loss account. I believe you understood this. Let us write a note over here. Let us write a note over here. Let us write a note over here. The amount spent, the amount spent on repairs and renewals on 30th September, on 30th September is is of revenue nature, is of revenue nature and not of capital nature, and not of capital nature, and not of capital nature, and hence not debited to machinery account. That means not capitalized, not debited to machinery account. This means this means it should not it should not be it should not be capitalized. It should not be capitalized to machinery account. It should not be capitalized to machinery account because because the repairs because the repairs is of because the repairs is of revenue nature. Revenue nature. I believe you understood till here. The repairs is of revenue nature. I believe you understood till here. Let us see this question once again. A bit long question but very interesting. So basically in this question what we have learned that Xerox Limited purchased the machinery for 80,000, spent 20,000 on the installation. The useful life was 4 years. In between 2016 they had basically repairs and renewals is done for 2000, but this is of revenue nature. This repairs and renewals is not of capital nature. On 30th September 2017 the machine is sold for 50,000. First of all what we have done, we have journalized the whole transaction. We have journalized the whole transaction. We have recorded the depreciation and transferred to profit and loss account all the entries in relation to this. After that, wherever required, we have done the working. So working note number 1, that was the calculation of the rate of depreciation. So first we calculated the rate of depreciation. We have also calculated the amount of depreciation, that was 15,000 for 12 months. Then we have calculated the profit or loss of sale of machinery. So the machinery, the value was 1 lakh. The depreciation is 37,500. So the book value was 62,500. Accordingly, we got the sales received, that is 50,000. So loss on sale of machine was 12,500. Accordingly, we made the machinery account. We made the machinery account for 3 years. First year, second year, third year. And then we made this depreciation account. We transferred the amount of depreciation to profit and loss account, and we written a crucial note in relation to the mid repairs, and that repair was of revenue nature. I believe you understood till here. Let's see what we have learnt in today's class. So in today's class We have learned the various cases where we have purchased the machinery. The date of purchase and date of sale was different, and accordingly, we have calculated the profit or loss in case of sale of machinery on a particular date. So, we have done various cases in relation to this, and after that, we have done this big illustration, that is Xerox Limited. I believe you understood. We'll keep this session till here only. We'll keep this session till here only. Thank you.